Hey guys, it's me, Julie from JP and Associates, your favorite realtor from Duran Realty Group. This is video number 3. Thanks for tuning in, and today we are going to be talking about the reasons and the importance of getting a pre-qualification or pre-approval through a lender of your choice. I have established many relationships with lenders throughout DFW in different areas of DFW, so they're not all particular in one area. They're everywhere pretty much. And I have developed multiple relationships with people because buyers don't have the same needs from a lender. Everybody's got different needs, different budgets, different qualification requirements that they need, and maybe you need, a loan that is going to fit to your personal needs. So I have to get that information from you and then match you up with somebody who I feel is going to be the best provider for you. Or you can do your own homework and research and find somebody, or maybe you know somebody already. Maybe somebody's in the family that's a loan officer and you want to use them as your preferred lender, and that's 100% okay with me too. If you're thinking about buying a new construction home, new construction builders typically have their own preferred lenders, which you can get very good incentives off if you use their lenders. You don't have to, though. You can use whatever lender you want to. If you're going to purchase some land and build, you're going to need a different type of lender. It's not your traditional lender. You would probably have to go through a bank or maybe a credit union to get that land and construction loan. So there's different types of loans for different types of people. But I wanted to talk to you really quick about the importance of getting a pre-qualification and doing that application as fast as you can. As soon as you get the idea in your head that I'm moving, I'm making a move, it's time for me to go, it's time for me to purchase this home, and I'm ready to do it. What I want to really stress to you is when you get that link from your lender, or you go online and Google somebody and you do that initial application, you might get a denial out of there. Don't let that discourage you. Don't be surprised either, because every lender's qualifications, what they're looking for when somebody is going to do one of those quick applications, and it says, you'll know your approval in 5 minutes or less, or whatever the case may be. Maybe your personal information doesn't match the system, or they can't verify it, or maybe your income, is too high, too low for the system criteria that's set. So it may give you a denial right away. So don't get your feelings hurt if that happens, and don't get discouraged. Still reach out to the lenders. You get somebody on the phone, you need a live person on the phone, and you just tell them, hey, I just did a quick application and for some reason it denied me. Can you take a look at my application and tell me, why exactly I got a denial? And they'll look through it. If it's something big, they'll tell you what it is. If it's something little, they'll also tell you what it is and explain to you what they need to get done to get an approval. Sometimes you may need, just depending on your credit history, payment history, your income, your job, how long, the length of time that you've been at your job, or your tax information. Maybe you just need to get that information to your loan officer, and they will take that to the next person to get that reviewed. They'll take it to one of their people in the back offices or processors or their underwriters, and be able to talk to them and tell them, maybe you had something on your credit report, maybe you had a repo, or, you had a bankruptcy that's listed on there, or some collection thing that's, not letting the system give that initial approval to you. So that may be something that they'll have to go and personally say, hey, this is what happened, this is why it happened, and is this something that we can still work with? Or, how do we go around it? Because where there's a will, there is a way to get you a pre-qualification and an approval, and on the road to start purchasing your home. The first thing a loan is going to do, a pre-qualification is going to do, is it's going to give me as an agent and the seller and the seller's agent clarification that you are qualified to purchase a home. You are a qualified buyer. If I have a home that's for sale, and I have people coming in and out of my house to show my house. I want to make sure that every single person that's coming through my home, whether I live there or not, is a qualified buyer. It tells you and the other people that you are working with that you are ready to go. You're qualified. Next thing your lender is going to go through is your credit history. Like I said in my other video, life happens. Not everybody has perfect credit. And believe me, it is a chore, okay? It is a chore to keep your credit on top. Unless you have tons of money in the bank, which not everybody does. If you're living paycheck to paycheck, life happens sometimes and you may not be able to pay that bill on time. You know, maybe that credit card goes past due, or, you know, you pay a car payment late, or maybe you pay, you know, your rent late, or whatever the case may be. Life happens, and credit agencies will report factualities, supposedly. That's what it's supposed to be, but it doesn't always happen that way. But before you start going and touching your credit or running your credit report, you know, and checking your own scores to see if, you know, you think personally you're going to qualify for a loan, talk to a loan officer. There may be some stuff on your credit report that they don't want you to touch. They don't want you to dispute, or they don't want you to go in and start picking at it, because the credit history goes off of the last time it was touched. So maybe you have something on your credit report that just doesn't need to be touched and bothered with. That's going to affect you negative if you go in there and start messing with it. So I would suggest that you talk to a loan officer first to see where you are credit-wise. If you get that qualification off right off the bat, then right on, we're good. You know, maybe there's something on there that you need to work on. Your loan officer will tell you, okay, maybe you don't have enough established credit. Maybe you're a person that, you know, never established credit yet, or, you know, you're young and you haven't established credit yet. So maybe that's something that you need to establish to bring up your credit score. Your loan officer will tell you, here's, you know, XXX credit card, you know, go out and get a credit card, or have, you know, one of your parents add you to maybe a credit card they have as a user on their credit line. They can give you the card. They don't have to give you the card. They can just add you on there just to boost up your credit score. You know, there's certain ways and certain techniques and certain things that a loan officer will tell you and advise you, but it's very specific to you. So that's why it's really important to connect with somebody, a loan officer, that's going to help you navigate your way to getting your credit right where it needs to be to get a pre-qualification. And if it's credit repair that you need, all of the loan companies, they have people that they work with. Or they'll tell you themselves, if it's not really bad, they'll tell you, look, if you pay this off, this, and this, it's going to bump your score up within, you know, 15 to 30 days and will get you right where you need. If it's major credit repair, they have people there that can help you. Some of them do upfront payments. Some of them do, you know, payments after your score is already up. I do have one lender from Supreme Lending that they have a credit team that works on people's credit, and they, you know, most of us, we don't have money to be putting up extra money out, you know, $100 every month for some credit repair company to say they're going to fix your credit, and maybe they will, maybe they won't. I don't know. I personally never used one of those, but if I was going to have to, I would use one that was connected with, you know, the transaction that I'm trying to do. And this is one of the biggest and most the biggest financial decision, one of the most biggest financial decisions that you'll ever make. So when you're purchasing a home, you want to work with professionals that know exactly what they're doing and why they're doing it. If you go out and get just, you know, your random credit repair, they'll fix your credit for you, but what are they doing for you? If they're not in the know of what exactly you're doing, why you're repairing your credit, what is it to them? So if you're working with somebody that's within a lending office and they're helping you, you know, repair your credit, they're going to go after and target specific things on your credit report to get that out of the way, off of your credit report, negotiate money down, whatever the case may be, will tell you exactly how to do it to get your credit score to where you need to be. So it's really important for you to understand and realize the importance of working with the lender and the people that they are connected with to get you where you want to be. That's the ultimate goal. The next thing they're going to do is they're going to review your income. And it doesn't matter what income you have. You can be on a fixed income. You can be on a government income. You can be disabled. You can be a vet. You can be, maybe somebody that has their own business. Maybe somebody that owns, multiple things, and, you don't technically go to a 9 to 5 job. So maybe, you don't have a paycheck. So maybe you need a bank statement loan. There's several types of loan products, several types of ways. Maybe you're, a stylist and you work in a salon and that's how you make your income. You may need a bank statement loan. It may not be your traditional loan. You may have, different options. So it's always good to talk to your agent and your loan officer. Let them know what you do as a profession, and then get the documentation that you need for them to be able to get you the pre-approval as fast as you can. Your standard stuff that you're going to need to get a loan is, your ID or identification. They need to know who you are, your social security number, your bank statements, and tax records for the last, you probably need bank statements. Sometimes they need them up to 2 years. So you may want to prepare that ahead of time if you're thinking about, going ahead and, pulling the trigger and getting that pre-approval. And your tax records too. You need 2 to 3 years of your tax records. So you may want to go online and ask for those tax records to be sent to you so that you have them ready to go when your loan officer asks for that information. And then there may be other documentations or proof of something, proof of payment that you may have to provide, but they'll give you a checklist because every loan company is different and the criteria is different and you're different. Not everybody's the same. My situation is not the same as yours. So you want to connect with that loan officer and go over your financial part, and they're going to let you know after reviewing all of your documentation financially what you are qualified to purchase. No loan officer anywhere that I know of, that I've heard of, will put you or qualify you for a home that you cannot afford to buy. So that is where they come in. That's where their expertise comes in reviewing all of your documentation and reviewing your budget and letting you know clearly and then on paper what exactly is the amount that you are qualified for and what you can afford as a monthly payment. The next step that they are going to do is they are going to present you with multiple options of loan products that they offer. They are going to go through all of the different types of loans that there is available for you, whether you're a veteran and you need a VA loan, or you qualify for an FHA loan, conventional loan, bank statement loan. Maybe you don't have a social security number and you need an ITIN. They will tell you exactly what loan products are out there, discuss the differences between those loan products, and then they'll tell you what you can get qualified for. They're knowledgeable about that information. They'll go over the guidelines with you, and then they'll discuss your options and what's best for you financially to move forward. The next thing they're going to do is they are going to give you all the information for first-time home buyers if you are a first-time home buyer. They will go over the different grant programs there are, what the costs are for those programs. I know that right now there is a program that I have connected multiple buyers with. It's called the LIFT program. And it's about a $99 fee, and you go online and you take some classes, and it financially educates you on managing your money and your budget. And then it gives you the breakdown of the type of loan that you'll qualify for and ask you different questions about managing your money. And really, it's a really educational program about the process of buying a home and then qualifying you for grant money to help you purchase your home. Maybe you need down payment assistance. Maybe you just qualify for a grant and you're in that bracket. Maybe you're a first responder, a doctor, somebody that works in the medical field, or a teacher. And that goes on to the administrative people. It just doesn't, it's not all for teachers. It's anybody that works in that industry can qualify for those types of grants and down payment assistance, and there's different types of products that are out there that can help you with money to purchase a home. And a lot of money too. The LIFT program can give you up to $15,000, and then you can layer those grants. So if you qualify for one, you're most likely going to qualify for another. So why not do those and get 30, plus $1,000 to go towards the purchase of your home? If you're working with the right lender, and they match your criteria with the programs that are available, there's a lot of opportunity for you to get down payment assistance, closing costs. You may go to the closing table and get a check back because you were approved for a certain amount, they used it, and there's still money left over. So make sure that you ask for those programs and have your loan officer run you through the criteria to see if you meet those, and then go out of your way. You got to take the initiative and go out of your way to get on there and do those classes, go to the classes, go to the online programs, pay the initial fee. For me, thinking about it, if somebody told me that I could go on and pay $100 and they were going to hand me a check for $15,000 to purchase a home, I'm all over it. Where do I give you my $100? I mean, the result is it on the paper and in the bank. So that's money that I don't have to come up with. That's money that I could put towards purchasing, furniture for my home, or, buying something else, or putting it in the bank and saving it so that in case something happens, I could still pay my payment. The next thing you're going to get after you go through all of that, your grants are approved. If you qualify for them, you got your pre-qualification. Now they're going to tell you, okay, you're ready to go. You're ready to start shopping. And you can start shopping for your home. You're going to go over all of the basics of your loan product before you get pre-qualified. And then they are a team of professionals that are going to work with you diligently to get you to the closing table. That is the ultimate goal, to get you to the closing table, to sign your papers, and to get you into your new home. They have processors and underwriters that are working with you and for you to get that done. I do want to stress to you though that the underwriting process of the loan is very stressful. So be prepared for that. Don't walk into buying a home lightly. It's very, very serious, and they take it very, very serious, and they need to make sure that they have all of the proper documentation. So try not to get frustrated, even though I know it's very frustrating for me on my side, for the sellers, for the seller agent. But it is very frustrating for the buyers when, they keep coming back and they keep asking for information that you maybe already provided one or two times. Just give it to them. Give it to them, give it to them, give it to them. Ask them whatever you need. I'll get it for you and get it back to them as fast as possible. The faster you do it, the faster we go to the closing table. I wanted to touch briefly on the different loan products. I'm not a loan officer, so that's not my area of expertise, but I know the gist of everything that's out there. And I wanted to touch a little bit on, your credit scores, your basic credit scores of what you need to get qualified for a loan. So you can kind of prepare yourself a little bit ahead of time, and before you actually, pull the trigger and do that loan application or make a phone call and talk to a loan officer. There's different loan products out there. So you're going to want to educate yourself on the different loan options that are out there. USDA loans. I'm going to quickly talk about zero down loans. USDA is one of them. You do have to be in a certain, suburb area, rural area, and it has to be met and qualified by USDA to be able to purchase one of those properties. But usually it's acreages of property that you're going to be buying you can get qualified for with zero down. Of course, there's VA loans that are zero down. FHA loans right now, I have one lender that is offering 3% down on FHA. Typical is 3 to 3.5%, but it does fluctuate with the economy. And conventional loans is usually 20% down. It's 20% down, and it could be in your own money or it could be gifted to you. They just have to know where that money's coming from or how you acquired the money for the down payment. Same thing with the FHA. If you had a family member that's going to help you out with down payment assistance, they just have to have something in writing from that family member that this is a gift and you don't have to pay it back. Grants, I do want to clarify something on the grants. You can qualify for a grant up to $15,000 or more if you layer them, or some programs are just, higher and lower. Just depends on what you qualify for your particular needs. But you don't have to pay the grants back. If you live in the home and occupy the home for 3 to 5 years, whatever the criteria is for that specific program and grant, you meet that, you don't have to pay it back. But if you do get in your home and you're there for 2 years, and for some reason your job moves you to another place and you need to sell your home and put it up for sale, and you haven't met that criteria, you will have to pay a portion of that money back, and that will be taken out at closing from whatever money that you get back after you sell your home. So just be aware of that, and just know that if you plan on staying in your home, for the duration of your life, or, the next 5 to 10 years, you probably won't have a problem, and you'll never have to pay that money back. And it'll just be free money that you got from one of the grant programs and your awesome agent that educated you about those programs. Credit scores real quick. They go down as low as 500, depending. I am going to tell you though, the higher your credit score, the lower your down payment will possibly be. Okay, so you don't really necessarily want to be just like, oh, well, screw it, I'm just going to go apply for a loan and I'm not going to try to do anything about my credit. Expect a higher down payment. They're going to want more money down if your credit score is lower, and it's anywhere. Even if you were to go buy a car and your credit score is not impeccable, they're going to ask you for a higher down payment. To just be expected. But they can go down as low. I've seen them, and I've heard of people going down as low as 500. That's not the goal though. So take care of your credit. I know it's very difficult. It's a chore. It's like a pain. It's like you got to do it if you're on a you live paycheck to paycheck. I mean, it's a beating to keep your credit score up. I get it because I've done it. So 500, they can go down to bank statement loans. They can go, 10% down, 15%, 20%. It just depends on who's actually going to, fund the loan in the end of what they're requiring in your history. FHA goes down to 580. But you probably want to bring it up to a 620. I would say 620 just to be on the safe side. I've had really good luck with 620 and up. Okay, so if you can get it to 600, ask your loan officer what you can do to get it up to a 620, and they'll tell you. And once you get it up to a 620, you're like pretty much in the clear. You're pretty much good to go. Anything under that, you're going to be struggling. So if you don't want to struggle, or if you mind the struggle, I don't know, to each is their own. But if I can make life easy, I'll make it easy instead of struggling through everything. But 580, 620 that's a goal score, 620. Work on that. But you can get qualified for a conventional loan at 620, and 3.5% to 5% down on a conventional. And then 640. Let me talk about 640 for a minute. You get your credit score up to a 640, you're golden right now, because there are programs you get up to a 640 and you can qualify for 0 down. And then those grant programs just open up all over the place. So 640, golden. 680, 700, 800. What are you talking about? You're going to get an approval. You got the money, you got the credit, you can do what you need to do. If you're on a fixed budget and you're just one of those people that have always taken care of their credit, and you've got an absolute, immaculate credit score, you're going to qualify for any loan product that's out there. So don't think that just because you're on a fixed budget, or you're disabled, maybe you're retired already, and you think that you don't make enough money. Everybody makes enough money to purchase a home. You don't have to spend the rest of your life renting and paying for somebody else's property to get paid off. You can purchase your own home, and it doesn't matter how much money you make. you can qualify for different loan products, and there's assistance out there to help you. You just have to connect with the right people and get it done. And the biggest, I think, obstacle that people face and that I've come across is just not knowing and being scared to find out. It's not going to hurt you. I mean, if your credit score is kind of shaky anyways, I mean, what are you worried about if somebody's going to run your credit to see if you qualify for a home? It's I mean, what are you going to lose? And if you are, one of those people that have really good credit, it's not going to affect you anyways. You got good credit, you have the money, you have the resources to do what you're going to do. So don't be afraid. Don't be afraid to reach out to a loan officer. Don't be afraid to reach out to your agent. Talk to somebody that's going to help you and educate you and guide you in the right direction to purchase your new home. If that's me, then let me help you. Give me a call. Share my video. If you like what I said, if I missed anything and you want me to go back and you want me to talk about something else, let me know in the comments below. Be sure to like my YouTube page. I want your comments and your feedback, so let me know. More videos to come. I hope to work with you in the future. Go to my website if you want to start looking around. It's www.duranrealtygroup.com. Come see my website. Talk to me, message me, text me. My phone number is 682-201-0211. I'm available anytime for you. If you have any other questions, let me know. Put the comments below. Share my video. I'll see you on the next one. Bye.